As we all know, taxes can be a complex and confusing subject, especially for small businesses. That's why it is important to clearly understand the different types of taxes that agencies may encounter. The purpose of this video is to provide a comprehensive overview of the most common hidden taxes and how they affect agencies. As an agency or the owner, it becomes crucial to understand all the taxes that may impact your business. Two taxes, in particular, are commonly overlooked yet are crucial for agencies to be aware of. The first is sales tax, and the second is reasonable compensation. These are the two most important from an agency tax business structure setup point of view that people frequently ask. And these are the things that especially younger agencies should be aware of. But before you learn about hidden taxes, pay attention to the big red subscription button. As soon as you click it, you will be taken to the wealthy side, the life you deserve, where you'll find hundreds of videos. These videos contain the answers to almost any question you may have. There are also daily updates, so if you want to stay tuned, remember to turn on notifications. First off, let's start with the sales tax. A sales tax is a consumption tax imposed by the government on the sale of goods and services. This tax is usually collected by the seller and then remitted to the government. The rate of sales tax varies from state to state and is generally based on the location of the sale. For example, a sale that takes place in California will have a different sales tax rate than a sale in New York. So it actually depends on who you are, what you're doing, and where you're doing it. So it's important to research the specifics in the context of your business. To give you an idea, let's take an example of sales tax to understand it in the context of agencies. Agencies, like any other business, are subject to sales tax. However, the specific laws and regulations surrounding sales tax for agencies can be complicated. For example, some states exempt certain types of services from sales tax, while others do not. Agencies need to familiarize themselves with the sales tax laws in their state and understand how they apply to their specific business. In Texas, for example, there's a large number of agencies that tax data processing. This may not seem like a big deal, but Texas's definition of data processing captures a lot of what a digital agency does. This is just one example, but pay attention to sales tax in different states because they may have different definitions and applications. In recent years, sales tax has become more complicated and is expected to become even more so as states look for revenue sources. There's talk about starting to tax services, which could potentially capture marketers, attorneys, and CPAs. So, the key takeaway for the agencies when it comes to sales tax is how much they know about themselves. They just have to be aware and ensure they understand the specifics of where you're doing business and whether what you're doing is taxable or not. It's important to research the context of your business. The second thing is reasonable compensation. Reasonable compensation is the amount of money an agency owner should pay themselves to run the business effectively. This amount is determined by a variety of factors, including the size and type of the agency, the industry in which it operates, and the owner's skills and experience. It is important for agencies to accurately determine their reasonable compensation to minimize their tax liability. To understand it better, let's say you have a corporation, either an S Corp or C Corp. An S Corp is the most common type of structure we see. Your incentive as the owner is to pay yourself as little as possible to avoid payroll tax. However, the IRS has the opposite incentive and requires you to take reasonable compensation. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Now, you might ask what reasonable compensation in IRS terms is. Well, reasonable compensation is the value that would ordinarily be paid for services by enterprises under similar circumstances. In IRS terms, reasonable comp is not codified, so it requires a level of judgment. You need to come up with a reasonable compensation amount by talking to a study, using Bureau of Labor Statistics data, and layering your business functions on top of it to determine a number. For example, if you spend 2,000 hours on certain functions and the market rate is $45 an hour for one function and $60 an hour for another, you would come up with a reasonable compensation amount based on that data. Reasonable compensation, on the other hand, is a value that would ordinarily be paid for similar services in similar circumstances. However, the term reasonable in IRS terms is not codified, so it requires a certain level of judgment, much like the employee vs. contractor discussion. So how do you determine what's reasonable compensation for an agency owner? For this, we have to talk to the agency and gather information about their functions, proficiency, and how many hours they spend on each task. Then, using government data from the Bureau of Labor Statistics, we layer this information on top of that data to come up with a number. It's all about finding the market rate for the services performed by the agency owner. In addition, it's important to keep in mind that the IRS incentive is for agency owners to pay themselves a reasonable amount so as not to avoid payroll taxes. If the compensation is too low, the IRS may consider it a red flag and audit the agency. So, to sum it up, sales tax and fair compensation are two important tax-related issues that agencies need to be aware of. Make sure to research and understand the sales tax laws and regulations in the state where the agency is doing business. And when it comes to reasonable compensation, work with a professional to determine a market rate for the services performed by the agency owner. These are hidden taxes that agencies often overlook, but they are essential to know about to avoid any potential issues with the government. Understanding the different types of hidden taxes is crucial for any agency to ensure that they comply with the law and minimize their tax liability. From sales tax to reasonable compensation, agencies need to have a clear understanding of the taxes that affect their business. We hope you find it helpful. Don't forget to share your thoughts with us in the comments section. Did you enjoy the video? Please hit the subscribe button, like, share, and comment.